All right, today we're jumping into a really fascinating corporate turnaround story. We're talking about the latest half-year results from KSH Holdings. Now, this is a company that has pulled off a seriously impressive financial recovery, and we're going to break down exactly how they did it, what's really driving this comeback, and what the road ahead might look like for them. So let's get right into it.
So, this is the big question, right? This is really what this whole explainer is all about. You just don't see this every day. A company going from that deep in the red to being comfortably in the black in only 12 months. This isn't some small tweak, it's a massive reversal of fortune. So how on earth did they do it? What levers did they pull to engineer such a dramatic swing? Well, that's exactly what we're here to figure out.
And this slide just lays it out so clearly. I mean, look at these numbers. First half of fiscal year 2025, KSH posts a net loss of 6.5 million Singapore dollars. You fast forward just 1 year, and they've reported a net profit of 5.3 million. That is an almost $12 million swing on the bottom line. And the thing to remember is, a turnaround this big is almost never an accident. It's got to be the result of a solid strategy, great execution, and a few key things all going right at the same time.
Okay, so let's get into the nitty-gritty of this comeback. We're going to peel back the layers of their financial reports to really pinpoint what was behind this return to profit. It's a story told in revenue, costs, and of course, future potential.
You know, the foundation of any good turnaround story, it almost always starts at the top line with revenue. And KSH is no different. Their total revenue for the period shot up by almost 20%, from $52.7 million to $63.1 million. You just can't reverse a multi-million-dollar loss without getting more money in the door. And this growth is really the first big piece of the puzzle. So, where did that extra cash come from?
What's so telling about this chart is how it shows you the company's engine room. Of that $63 million in revenue, a whopping $61.1 million came from their core construction business. The other $2 million, that came from rental income on their properties. This tells us, loud and clear, that the construction side of things isn't just part of the story, it is the story. That's where the growth and ultimately the profit was really made.
So, we know revenue is up, and we know it's coming from construction. But that's not the whole picture. To go from a loss to a profit, you've got to manage more than just your sales. We've actually pinpointed 3 critical factors that really put the turbocharge on this turnaround. First up, let's zoom right in on that construction revenue. It didn't just grow, it surged by over 22%. And this wasn't from some single massive new project. The company actually said this was mainly due to higher work progress achieved across ongoing projects. What that means in simple terms is they just got more work done on the projects they already had. That points to some really strong operational efficiency and project management out in the field.
Now, making more money is only half the battle. You also have to spend less. And this is where KSH really knocked it out of the park. Just look at that number. Their finance costs, that's basically the interest they pay on loans, they dropped by over 42%. That is a huge deal for the bottom line, and it wasn't an accident. The company was actively paying down debt and getting better borrowing terms. It's a clear sign of smart, disciplined financial management.
And the third key factor is all about the future. An order book is just the total value of confirmed contracted work that a company has on its plate but hasn't finished yet. KSS's order book is sitting at a very, very healthy $500 million. Why does that matter so much? Well, it gives them incredible visibility. It means they have a steady stream of revenue already locked in that's going to carry them all the way through to fiscal year 2029. This isn't just a one-time thing. They've built a real pipeline for the future.
Okay, so we've seen the big picture numbers. Now let's break the company down into its 2 main business engines, construction and property development, so we can understand the unique strengths that each one is bringing to the table.
So, the construction segment is clearly the powerhouse right now. We already talked about that massive $500 million order book. But what's also super important is their A1 grading from Singapore's Building and Construction Authority. That's the highest grade you can get, and it lets them bid on public sector projects of any size, unlimited value. That's a huge competitive advantage. They've built this great reputation, especially in complex projects like labs, and they're all about quality and disciplined execution. This is their stable, cash-generating core.
And now for the second engine, property development. What's so interesting here is the future potential that's already locked in. KSH has a share of $183 million in what's called unrecognized revenue. What does that mean? Well, it means they've already sold these properties, mostly in Singapore joint ventures like the Arcady and One Sophia. But because of accounting rules, they can only put that money on the books as the buildings are actually being built. So you can think of it as $183 million in revenue that's already in the bag, just waiting to flow into their accounts over the next few years.
It's a massive future booster for their earnings.
Of course, no business operates in a vacuum. After looking at all of KSH's internal strengths, we have to look at the world outside. A strong company still has to deal with the broader economy, and there are definitely some headwinds on the horizon.
This slide gives us a quick snapshot of the Singaporean economy, which is where KSH does most of its business. And you can see a pretty clear trend. Growth is slowing down. Both overall GDP growth and, more importantly for KSH, construction sector growth cooled off quite a bit between the second and third quarters of 2025. A slowing economy can mean fewer new projects and more competition. This is the new reality KSH is operating in.
So let's put it all together. This slide really captures the tension for KSH going forward. On one hand, their internal strengths are just fantastic. They're sitting on a huge cash pile of over $114 million, their debt is incredibly low, and that $500 million order book is a fantastic cushion. But on the other hand, the external risks are real. Global economic uncertainty, that slowing growth in Singapore we just saw, and a property market in China that's still very tough. Their success is going to depend on how well those strengths can protect them from these risks.
We mentioned gearing as a key strength, so let's just quickly define that. The gearing ratio simply compares a company's debt to its equity. And here's an easy way to think about it. For every dollar of its own money or equity that KSH has, it only owes 20 cents in debt. A ratio of 0.20 is considered very, very low, and it just means they have a super robust conservative financial structure. It gives them a ton of flexibility, especially when things get uncertain. It's a huge strategic asset.
So after breaking down the numbers, the business units, and the world they operate in, what's the big takeaway? How should we really view KSH's position and its outlook for the future?
Okay, let's quickly recap the story. Step 1, an incredible financial reversal, turning that $6.5 million loss into a $5.3 million profit. Step 2, this whole thing was powered by a massive 22% jump in their core construction business. Step 3, it was boosted by really smart financial discipline that slashed their borrowing costs. And Step 4, the entire comeback is sitting on a rock-solid balance sheet and a $500 million pipeline of future work.
I think this quote from the executive chairman, Mr. Chu Chi-on, just perfectly sums up their whole strategy. The keywords here are disciplined execution and quality growth. This comeback wasn't about taking crazy risks. It was about focusing on what they do best, managing their projects well, and keeping their finances in amazing shape. It was a deliberate, well-executed plan.
And so we end with this question. KSH has done the hard work of getting its own house in order. Its foundation is incredibly solid, with strong operations, a healthy order book, and a balance sheet that's like a fortress. But it's facing a world with slower growth and economic uncertainty. The key question for everyone now is whether that strong foundation is enough to not only handle the challenges ahead, but to actually keep building on this remarkable success story. Thanks so much for joining us.